Yesterday marked a landmark day in the cryptocurrency sector as spot Ethereum ETFs began trading on U.S. exchanges. While this sent shockwaves through the digital assets ecosystem, it didn't do much to significantly move the price of the second most valuable cryptocurrency. The price of Ethereum currently is trading at about $3,500 a token. Joining me now is Andy Baehr. He's the head of product at CoinDesk Indices. Thanks so much for coming on the show today. Why do you think the launch of spot Ethereum ETFs is so significant? How much activity did we see?
It's really important for investors to be able to see a second major cryptocurrency. The Ethereum network is 9 years old, Bitcoin is 15 years old. Ethereum is about a third of the size, but it has a completely different use case. So this is investors' first chance to explore something beyond Bitcoin.
Talk me through what use case that is, in reference to and comparing it to Bitcoin.
Bitcoin is a store of value. The Bitcoin blockchain basically serves to move Bitcoin around and very little else, right? So think of it as a currency or as digital gold. Ethereum is a platform where tokenization and stable coins and smart contract platforms are based, exist, get executed, and get cleared. It's almost like an app store for the digital asset class.
More of an asset.
Definitely more of an asset, more of a growth product. The thing is, we should be very pleased with how the ETFs started to list. 3 of them right here on the New York Stock Exchange. There were no hiccups. We've been through this before. Volumes were exciting. But we shouldn't be satisfied, right? There's many more digital assets. Investors need more diversification. They need exposure to more of the digital asset class and other areas. They can trade our CoinDesk 20 index in various forms. We'd like to see more of that here.
Yeah, more specifically about what Ether's been doing, the price of Ether, it didn't swing wildly despite spot ETFs beginning to trade in the U.S. markets yesterday. Talk me through more of that.
Bitcoin's price rose 72% in the 3 months before the ETFs came alive here back in January. Ether's price was about flat, maybe up a couple of percent in the 3 months up until yesterday. So part of that is just there wasn't enough anticipation, surprise, pent-up demand. Part of it is that there's a little bit of weight hanging over the price of Bitcoin right now because of supply that's coming onto the market. So we want to see these assets start to move on their own merits and give the investors the diversification benefit they need. Better liquidity, ETFs will help with that. So the ecosystem is growing and getting more robust.
How was this launch different from the spot Bitcoin ETFs that began trading in January?
Well, almost boringly smooth, right? It was really superb how the crypto native market structure and the ETF market structure mated to make the Bitcoin ETF successful from day one, almost seamlessly. So there were no hiccups that I've heard about yesterday, and that's kind of what we expected. About a third of the size, about a quarter of the volume. That's about right, and we'll see where we go from here.
Yeah, we're so used to hearing about chaos in the crypto space when we hear of Bitcoin, and we're sort of shocked when we see things like Ether not make these wild swings. Is this something we should just get used to with Ether?
Definitely the volatility of all cryptocurrencies will come down as more investors start to adopt with different need cases and more wrappers. Remember, almost 30% of Ether is tied up in staking. Another 10% is tied up in smart contract platforms. That leaves kind of a little bit less of its market cap available to be used in these ETFs. So supply constraints on Ether might be a reason why the ETFs perform well. The main thing investors should think about is learn about Ethereum, learn why it's different from Bitcoin, learn about other crypto assets, and think what would really make the best, broadest portfolio for them.
Yeah, what's the trick to sort of broadening out Ether and getting it to, Bitcoin is sort of just rolls off the tongue. It's so widely known. Ether less so. I guess how do you sort of get the marketing out for Ether?
When this was happening in technology stocks back 25 years ago, the QQQ came out, and that became a great ETF to represent the future of tech. The CoinDesk 20 index, which is available in the U.S. in funds and in SMAs and available in derivatives all over the world, represents the future of finance. So it's a broad-based index. That's really the best way for investors to sort of, kind of capture the top 20 assets and not have to deal with the other 23,000. So we really think that's the best thing investors should educate themselves on.
All right, so let's talk about what comes next. What do investors need to navigate the digital asset class?
Definitely education. Discussions with their advisors. About portfolio allocations, we hear things about 2 to 5%. Crypto is a $2.5 trillion asset class. Bitcoin and Ether make up only about 75% of it. There's a lot more to explore. Ethereum has competition in a way that Bitcoin doesn't. So the other smart contract platforms that compete with Ethereum are definitely worth exploring as well. So now the game is afoot. There's more than one asset class. It's not just about Bitcoin. Look at the CoinDesk 20 index. Think about the asset class in general.
Wonderful. Andy Baehr, so great talking with you today.
Thanks so much.
Thanks so much.